Good evening, friends. Was busy in a bit of a personal work, so the video upload is a bit late. Okay, date 21st July 25. Today we tried strangles on Sensex and Nifty. Now, if you see my tweets, I guess all of you are following them. Around 10:10, I made a tweet that these are the strikes which I am watching today. Obviously, Sensex offers better chances of decay at 1 DT. Since IVRQ is on a high IV regime, no trade as of now. Waiting for IVRQ to signal a falling IV and regime to be normal or low. Only then we'll look or enter trades. Now this is the Sensex chart, and if you see this is from today morning 10 o'clock 9:15. This changed into normal regime at around 11 o'clock, and this turned red around 10:50, 10:45, 10:50. So 10:45 to 11 o'clock was basically the space where this gave you a sell signal, right? Now let us again go back out here. So what were the trades? Strangle strikes were 82,200 and 81,900 put. About the strangle strikes, why these strikes, we'll come to it later. Strike logic is Greek based, this is to be explained later. Okay, ATM IV at initiation was 11.42%. that is, when we initiated the strangle, your IV was somewhere around 11.4, around here, right? See on the right hand side. Straddle premium was 326. I mean, if you go to the charts, you can, this is around 326. Okay, so IV regime tagged as normal. Stop loss was 368, risk was 42 points, 13% of straddle price. Now entry triggered at 10:55 to 11 am. This coincides with, why was an entry triggered? A declining trend in IV, red line on the IVRQ panel, a confirmed normal IV regime with steady decay, no volatility spike, supporting of mean reversion and premium erosion. The edge in this trade is Strangle is likely to benefit from slow bleed in premium, theta decay, as IV continues to compress. The bottom section IVRQ shows a sharp fall in IV ever entry, including IV crush post opening volatility, a shift from early high entropies morning spike to structured stable behavior, no regime shift from normal throughout the session after it went into normal, reinforces system confidence to hold the straddle or strangle. Price behavior, index remained range bound with downside bias post entry. Straddle premium continued to decay smoothly, straddle strangle whatever smoothly from 326 to sub 220. No major stop loss triggers seen on chart. So your entry premium was 326, your exit potential was, you could have exited around 210, maximum stop loss was not hit, IV trend was down post entry, regime stability was normal. So net result was profitable, strangle sell due to IV crush and stable structure. So the key strength of this particular structure, what we did today, was excellent timing on the strangle entry, entered post-mounting volatility spike when IV peaked, held through structured low vol environment, that means we maximized theta decay, regime tagging and visual decay made it psychologically easier to hold. Now I am going to show you three pictures, but before that, the strategic takeaway from today's trade is selling straddles or strangles during a post-volatility spike phase into a normal or low IV regime with a defined stop loss is a high probability setup. The system picked up the perfect zone between 10:45 to 11 am where price stabilized and IV started falling. Now let us come to the pictures. This is your first picture. As you can see, the place where I have marked on Sensex, this is where from red it enters normal IV and this signal is also red. So this is where we will be actually selling the strangle. Okay, number one. Second picture, sorry, it went too fast. Second picture is this one. What I have done here is I have marked the IV into three boxes. So what I want to show you is this green box is basically the high IV regime. If you can see, IV goes up, goes down. So in this whole box, IV is actually not falling, it is at the same price. So if you are a straddle or a strangle seller, selling here is basically dicey because IV from here at any point of time go up. So this is a place where I will not trade. Now IV enters a normal zone out here. So in a normal zone, you see IV is continuously decaying slowly. And when these markers come, that is low IV zone, you see the IV decay is super fast. So if you are selling strangles or straddles, do not sell it in this kind of scenario where the background is red, you are on a high IV regime. sell when it is low, add positions when it gets into a lower IV regime. You will be making much more, I would say, safer money. Okay. As you can see, again I have written that IV is basically flat when you are in a high IV regime. It is going up on the same place. In a normal regime, the speed of IV fall is slow. In a low regime, speed of IV fall is very fast. Now, one more point, you might have this question. See, this is where you might think a stop loss has been triggered, right? Now, there are 2 points to this. You sold this somewhere around 326, 330. Even if your stop loss gets triggered, it is getting triggered at 278. So, 336 to 278 is roughly 58 points. Point 1. Point 2. If this is not an expiry day, on an expiry day there is no two ways. If your stop loss triggers, you will get out. You will not wait. But on other days, non-expiry days, if you are on a normal IV regime and this IV line is red, wait with this stop loss for the price to close above the stop loss line. Okay. So in a normal day, that is a non-expiry day, if the IV is sloping down, you are in a normal or a low regime, wait for this price to close above the stop loss line. If it closes, you will get out. If it doesn't, you continue the trade. Now, if you are not on an expiry day, you don't actually have any gamma risk on this particular strangle. As such, strangles do not have gamma risk. But on a non-expiry day, gamma risk is actually non-existent. That's why I said, on an expiry day touch, you will get stopped out. Do not wait. On a non-expiry day, wait for this to close above this. This will be much better understood if I show you the Nifty chart today. Nifty similar, I sold at around 115, 110 or whatever. This is where your stop loss get triggered at 103. Now if I see this bar, see the stop loss has come below. This means the stop loss has been triggered. So at 103 I square off my trade. So I sold at 110, 12, whatever, 103 I squared off. Now concentrate on this bar. Here again this is below the stop loss. This stop loss has been broken. This one is red and going down. So I will sell here out again at 98 and this goes down to 88. So this trade is also there. So what logic did we learn? Stop loss line, touch and go stop loss on expiry day. Don't wait for a single second. Keep your stop loss in the system. On non-expiry day, gamma risk is non-existent, especially in a strangle. There you can wait for this particular strangle to close above the stop loss line. Only then get out of your trade. Okay. So this was kind of your idea for the day. I have one more screenshot to show. Somebody asked a very interesting question. This was asked by Amitabo. Amitabo is an old subscriber of QuantGym. He is using some other products also. He said, yes, watching, find it that strike selection is key. Strangles with adjacent strikes have hit stop loss, not this one. Now, I am not doing this randomly. You have seen me do this twice. You have seen me on Friday. You have seen me doing this on today. Tomorrow obviously will be expiry day on Sensex, so it will be Sensex straddles. Again, we'll pick up Nifty strangles on Wednesday. Now, if you are just trading Nifty for 5 days, obviously on the expiry day you are selling straddles, but rest 4 days you will be concentrating on strangles. Now, to cut the long story short, not all strangle strikes are equal. Different strangle strikes will decay differently on different days of the week. To identify that, a lot of Greek or quantitative analysis is required. Now the masterclass which I am talking about, we will hold after the demo is over and people have entered the course. Will totally explain this. It will not be a black box logic. I will show you the math, show you the quant analysis, why I am doing this, and that will help you to pick up the perfect strike to sell strangles. Now the reason I need to teach that is, that strangle strike which I am seeing in the morning, depending upon market movement, the strangle strike might change during the day. This happened on Friday if you remember. So if the strangle strike changes, you are on a particular strangle, you will simply square it off, go to the new strangle. Maybe one strike is changing, so you square off that side and shift to the next strike. So this whole methodology will be taught in the masterclass, and trust me, the reason I am terming is masterclass is I don't think anybody has ever shown anything like this in the market till now. So wait for that. Till now during the demo I will, whenever there is a strangle being chosen, I will tweet that which strike I am watching. But obviously on expiry day it is always a straddle. Okay, like tomorrow Sensex expiry will be a straddle. Now on a Sensex expiry, if you are conservative, you can also trade on a Nifty strangle. because Tuesday also Nifty has got into that theta decay zone. So tomorrow I will do two things. So on one hand I will track the Nifty Sensex straddle, and on another hand I will track the Nifty strangle as per these rules. In the evening I will again analyze these two and show you what happened during the day. Okay, thank you so much. I hope everybody is enjoying the demo. Keep your questions coming. If you have any question, you can ask me on email. I would love to answer those. Thank you.